Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. GST collections during November crossed the 1 lakh crore mark for the second straight month. They stood at 1.03 lakh crore. The Telecom regulator increases free-to-air channels, caps pricing on pay channels, and number of bouquets offered by broadcasters. Tata Motors reports a 14% drop in its overall sales for the month of December. Other unlisted players like Hyundai and Honda report a 10 and 36% drop in sales respectively. And Asian markets are off to a mixed start as trading resumes after the New Year holiday. Japanese markets are shut for the remainder of the week, though. Now, as the US markets remain shut on account of the New Year holiday, let's first begin by taking a look at what's making headlines across the globe. Rosalind Chin of Bloomberg News brings you the first word headlines.
9 people have been killed in Indonesia as heavy monsoon rains hit regions around the capital, Jakarta, triggering the worst flooding in almost 7 years. The downpour submerged homes and cars and shut one of Jakarta's airports, knocking out power to a wide area. Indonesia's weather agency expects rainfall to continue for the next 3 days. Kim Jong-un says he's no longer bound by his pledge to halt major missile tests and will soon debut what he calls a new strategic weapon. The North Korean leader says US sanctions leave him no choice but to reconsider commitments that underpinned his 3 meetings with President Trump over the past 18 months. Trump's immediate reaction was muted, repeating his assertion that Kim had agreed to denuclearize. Japan is expected to speak with Lebanon through diplomatic channels about Carlos Ghosn's escape. According to a senior Japanese official, the government was still unaware of details, including how Ghosn managed to flee Japan and his exact whereabouts. The countries do not have an extradition treaty, and it's not clear what the Japanese government can pursue in its diplomatic negotiations. Thousands of tourists and locals have been told to leave coastal areas south of Sydney as authorities warn Australia's bushfire crisis is set to intensify. At least 7 people have been killed in the region this week and hundreds of properties destroyed. Severe fires have been burning across Australia for weeks, and the scale of the disaster has fueled criticism of the Morrison government's climate change policies.
I want to thank all of those who are out fighting those fires, all of those who are out there supporting them in these difficult times. The conditions remain tough. And for the rest of us, it's a matter of just simply listening to the instructions, staying safe and being patient and doing what we need to do to put ourselves in a place of safety.
Global news 24 hours a day, on air and at Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rosalind Chin. This is Bloomberg.
All right, now Hong Kong kicked off the new year with renewed protests, vandalism and tear gas being fired by police. Over 50,000 protesters fought with the police through the night on New Year's Day. Stephen Engel of Bloomberg News gets you more details.
We had the January 1st rally from Victoria Park here to Central. The CHRF, which is the organizer of that rally, said more than 1 million people turned out. The police put the number, at least at the beginning at Victoria Park, at about 60,000, so quite a discrepancy. We can safely say tens of thousands of protesters did turn out, and not just the protesters, ordinary citizens of all ages did turn out, like we saw in June, not as large, but same as June. And you know, again, they're calling on the government, the protesters are calling on the government to meet many of their demands, those 5 main demands. However, the government, they say, has remained intransigent towards those demands, and that's where we are heading into 2020, pretty much of a stalemate. Pretty much the date has changed, everything else has not. The reason why we're standing here in front of the HSBC Asia headquarters is because, again, there was a lot of graffiti and vandalism overnight, including of the 85-year-old lions that sit outside of the HSBC headquarters. This is the lion Stephen, the other lion over here is Stit. They were both cast in bronze back in 1935, so what, 80 years ago. They are replicas of the original lions that were outside the Shanghai building, the headquarters from the 1920s. So they've been here at this site on 1 Queens Road Central for a long, long time, long before this more recent headquarters was built. belt, and the graffiti that is sprayed around it in Chinese characters says pretty much that HSBC has been dyed red by China. That's what this graffiti says. On the other one, it basically just says Hong Se, or red color. Again, the metaphor that HSBC is siding with China. Keep in mind, the ire focused on HSBC is because of a couple weeks ago, they did close an account of Spark Alliance, which is an organization which helped raise funds for protesters, largely to pay for their legal fees, including the high cost of bail for the more than 6,000 people who have already been arrested by the police over the last 6 months. HSBC in a statement says the action here of the graffiti and the vandalism of their various ATMs as well was unjustified, and that the account was closed at the behest of a client, not necessarily their choice. Again, police froze the account of Spark Alliance, seizing about $9,000, or freezing, I should say, about $9,000 US on charges or suspicion of money laundering.
All right, let's take a look at the Asian markets, at least the ones that are open so far. Sophie Kamruddin is joining us from the Bloomberg studios in Hong Kong. Good morning, Sophie, and Happy New Year to you and everybody else there in Hong Kong. How are we looking at the start of the year?
Well, Happy New Year, Alex. Today we have Japan remaining offline for the extended holiday break, but Nikkei futures are climbing with S&P E-minis, and the TAIEX leading regional markets modestly higher when it comes to outside of the mainland, with some fairly decent PMI readings to consider from across Asia. Factory activity picked up in Taiwan, and South Korea snapped 7 months of contraction with new export orders jumping. Yet the Kospi is trading at session lows, off 0.9%, weighed by Samsung, and over in Sydney, the ASX 200 fluctuating between gains and losses, with financials a drag on the index. Now, regional currencies are looking mixed, with the Malaysian ringgit and Taiwanese dollar strengthening the most, while the Sing dollar consolidating after the latest GDP report showed the Singaporean economy grew at the slowest pace in 10 years in 2019. Now, the offshore yuan on the back foot, but still below that 7 handle. This after the PBOC reaffirmed its commitment to easing with a RRR cut. Now, we are waiting on the latest private gauge of China's factory PMI. That's expected to come in around its November level in the expansionary zone. And today we are seeing Chinese stocks starting 2020 on the front foot, with a Shanghai Composite adding about 0.8%, and stocks here in Hong Kong also gaining ground. The Hang Seng up 0.8%. Back to you.
Thanks so much for that, Sophie. On to an update on oil now, where prices capped their strongest year since 2016, backed by the OPEC's compliance to output curbs and the trade truce that is imminent between the US and China. So what's the outlook going to be going into 2020? Vandana Hari of Vanda Insights shared her views on Bloomberg Television earlier. Listen in to a slice of that conversation.
Clearly, there's two factors that have been holding up prices towards the end of last year, as we saw. So one of those obviously has been deeper OPEC, non-OPEC cuts that have been pledged for the first quarter of this year. And the other one was the US and China agreeing a partial trade deal. As we get into 2020, both these factors remain quite supportive, but with caveats, of course. One of those is going to be that the OPEC, non-OPEC cuts, the duration is unusually short. And as you just mentioned, though it is valid for the first quarter of this year, they're going to meet at the start of March to decide what to do for the rest of the year. So clearly, barely 2 months into the year, the market will be looking for direction from OPEC, non-OPEC. What are they going to do with their production restraint for the remainder of 2020?
And how will they find the market balance here?
So it's going to be tough. I think one key takeaway for me when they announced in December that they would be just extending, or rather they would be deepening the cuts just for the first quarter of this year, was that clearly they realize the unpredictability and uncertainty in the markets has grown quite a bit. Now, for the past few years, that uncertainty used to be mostly U.S. shale and how that's going to perform in any price environment. But increasingly, since last year, that uncertainty is around demand. So, and I have a feeling, though, that even in 2 months into the year, even after the Phase 1 deal has been signed, they'll probably end up meeting again with that same uncertainty around demand. Given that, my belief is that they will probably keep a rein on supply. We've had some comments from the Russian oil minister in the past few days that he's again looking for an unwinding of the cuts, but I believe they'll have to continue maintaining a tight rein on supply throughout 2020.
So is the global growth outlook really the critical driver for the oil price in 2020 then?
Yeah, absolutely, Paul. So again, a couple of things here. And, earlier in your show, you've been discussing quite a bit about what should the world expect now with the Phase 1 deal about to be signed on the 15th of January. For the oil markets, it gets a little more complicated. So first of all, the oil markets have to figure out the progress of, how China and the U.S. continue to de-escalate that conflict. And I don't think anyone's holding their breath for a complete rapprochement or, things getting back to normal, back to pre-2019 things, how the trade relationships were. For the oil market, it gets a little more complex because then you have to connect the dots with what would any potential de-escalation of the trade conflict mean for oil demand growth. And, I would caution our viewers from drawing a very straight line between that. If things are starting to look good on the trade front between the U.S. and China, that means demand growth will pick up in oil. I don't think that's necessarily the case. We saw quite a tepid growth, especially in the largest market, U.S., and the third largest oil consumer, India. China's the only one which held up demand growth a little bit in 2019, but we have to see how it does in 2020.
All right, now we've been bringing you updates from Australia. Extreme weather in the coming days is set to intensify the wildfires that are raging in that country. The death toll is rising and the military has been scrambled to help thousands of stranded people who've been cut off across the coast of New South Wales. Ed Johnson of Bloomberg News is sharing more details.
This week alone, 7 people have died on the south coast of New South Wales as these devastating fires swept through coastal communities that have been packed with tourists during the peak summer holiday season. And there's also been reports of a death in East Gippsland in the far southeast corner of Victoria State. Now, firefighters are taking advantage of cooler weather over the next couple of days to try to contain some of these blazes. They've reopened roads and they've taken the unprecedented step of urging thousands of tourists in a strip of land between Batesman's Bay and the border of Victoria, urging thousands of tourists to get out of that region, saying it's simply not safe. And as extreme weather conditions return on Saturday, they should take the opportunity to get out now.
Well, there is a political dimension to all of this as well. What's the pressure been like on the Prime Minister?
That's a really good question, and I think the politics of this will play out for some time to come. There has been a tremendous backlash against Prime Minister Scott Morrison on social media over the past week or so, particularly after he took a pre-Christmas trip to Hawaii with his family. People appear to be angry about his government's support of the coal industry, and on social media there is a satirical hashtag, Scotty from Marketing, running a nod to his former job as boss of Tourism Australia.
All right, let's now take a look at how the Indian market is going to set up for today. Agam Vakil is here to tell you all about the trade setup for the day, as well as what's happening in the futures and options space. Good morning, Agam, and Happy New Year to you. How are we looking at the start of trade today?
Happy New Year to you, Alex. We are looking at reduce volumes, and that has been the case for the past few days. That's likely that it may very well continue. It may be slightly higher than what we've seen yesterday, considering a lot of markets yesterday were close, and we didn't really have as much in terms of activity as far as Indian markets are concerned either. The SGX Nifty is currently trending marginally in the red. As far as our own indices go, we did see some advances, but not too much. And again, we must remember that there wasn't as much activity. So we must take these returns with a pinch of salt, at least right now, and mustn't draw too much of a conclusion with respect to the direction. As you can see, the banking indices were also largely, flat. But let's talk about your fund flows. Again, participation was low. In fact, very little from foreign institutional investors, along with DIIs, all not plowing in too much either. When it comes to the contributors, we are keeping an eye on the HDFC Twins and Infosys, which held on to the 14-point up move for the indices. But again, it was a flattish day of trade, so we really can't say much with respect to the big movers. And from there, let's move on and talk about futures and options. Again, the overall turnover in the futures and options segment was low. There was unwinding in the futures, Nifty futures, the Nifty banking futures also saw very, very little, change in open interest. As far as your open interest distribution in options is concerned, not much has changed there either. We're looking at a 500-point range within 12,000 and 12,500. And in terms of changes in open interest, it was largely the 12,100 put, which was the most active. It did see the most amount of writing. Moving on, let's also talk about the India VIX, which came off by around a little over 0.5% at around 11.6. The Nifty put call ratio remaining largely unchanged at around 1.14. And in terms of stocks, what we are keeping an eye on is ESC, Titan. Of course, we did see a lot of shorts building in, and ONGC, Coal India, among others, which were in focus. In terms of stocks which saw unwinding, let's bring that list up as well. We have Dish TV, NTPC, and United Breweries. So not too much to speak for there, Alex. And I reckon that it may very well start off, very quietly. And from there on, let's see what happens in the second half of the session.
Thanks so much for that, Agam. All right, let's take a look at some of the stocks that you have to watch out for in trade today. Agam's told you about a few, but Somit Sarkar is here to tell you about the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with the auto stocks which reported numbers post-market hours. Firstly, Eicher Motors, where they have reported that VECV December sales were down nearly 19%. Close to 5,042 units versus 6,236 units reported by the company last year. Tata Motors, where December sales were down nearly 14% to close to 46,900 units. However, the number were ahead of the analyst estimates of 40,600 units for the month of December. Gujarat Narmada Valley Fertilizers, because they have received a demand of notice from the Telecom department directing the company to deposit nearly 15,000 crore rupees before January 23rd. Now, this notice is in connection of the AGR notice that had been come out by Supreme Court regarding the internet license service providers, that the company also held an internet service providing license, and that's the reason they have received this notice from the Department of Telecommunication. Prakash Industries, because they have secured a long-term coal linkage of around 1.69 lakh million ton per annum for the next 5 years. Now, these linkages will result into substantial cost savings in sponge iron production at its integrated steel plant at Champa, Chhattisgarh. Muthoot Capital, because they have completed securitization transaction of nearly 145 crore rupees on December 31st. Lemon Tree Hotel, because they have signed a license agreement for a room hotel in Dehradun, for a 40-room hotel in Dehradun. And lastly, Coal India, because the December production rose by nearly 7% compared to last year to close to 58 million tons, while the sales rose nearly 2% to close to 63.6 million tons in the month of December compared to last year.
All right. Well, thanks so much for that, Somit. Now, the Telecom regulator has tweaked its tariff order for broadcasters and cable operators. Under the new regime, the monthly pricing takes place, that is of television channels, takes place in a bouquet, and when the customer subscribes to them a la carte, they will be linked. We will bring you updates about that in just a short while. Sajid Mangat of Bloomberg News is going to be joining us on the phone line to take you through that. In the meanwhile, why don't we very quickly take a look at the bond market and where the bond market is set up. We've taken you through the stocks that you have to look out for. Remember, the run-up to this year is going to be with regard to what the RBI has been doing on the monetary side with regard to Operation Twist, and of course heading into the budget we're going to be watching out for that fiscal deficit number, which, as you know, yesterday came in 114.8% of the fiscal deficit target for the full year as of November. But I believe we do have Sajid back on the phone line. Morning, Sajid. You're taking us through the latest regulations with regard to the pricing of television channels. What are you picking up?
Okay, so TRAI came out with a second amendment to the tariff order, which basically gives a framework for pricing of channels and charges which are levied by MSOs or DTH players on broadcasters. As per the new guidelines, the TRAI is trying to link the a la carte price with the bouquet price. So what they have done is that the bouquet price cannot be 1.5 times the sum total of within 1.5 times of the bouquet price and a la carte price linkages, which has been done. Plus, they have also ensured that that the a la carte price cannot be 3 times more than the average price of the pay channel, which is there in the bouquet. In further, what they have done, they have brought down the maximum price of 19 rupees to 12 rupees if any broadcaster want to keep the channel in a bouquet. So that means that broadcasters will have to bring down the prices to 12 rupees so that they can be part of the bouquet. And they have also ensured the number of bouquets brought out by broadcasters cannot exceed the number of pay channels that they have. Currently, there has been a trend of a lot of bouquet channels coming in, and as a result of which, the consumers were not able to decide on what channels to pick up. Especially with respect to the a la carte pricing and the bouquet pricing, there used to be a huge differential, forcing consumers to go for a bouquet instead of going for a la carte channel. Further, what they have done is that the network carriage fee, which was earlier of 130 rupees and providing them 100 free-to-air channels, that now allows them to carry up to 200 channels free to air. And if any MSO is giving them more than 200 channels as free to air, then he cannot charge more than 160 rupees per month. These things are going to have a huge impact on the broadcasters, but bigger thing would be for the MSOs and DTH players, where the carriage fee now has been capped at 4 lakh rupees per month for the entire country if they are pan-India, and if they're state, it could be much lower. So there is a huge impact of revenue which will come in from March 1st onwards, when this entire new tariff order comes into play. All the broadcasters are supposed to put out their pricing by Jan 15th, and by 28th all the MSOs needs to be putting it out on their websites. So the consumer has been given at least a month and a half to move towards the new pricing, which is effective March 1, 2020.
Important updates there. Thank you so much, Sajid, for joining us this early in the morning. Watch out for updates therein. Now, let's talk about an important aspect of the government's finances. The goods and services tax collection for the month of November, it crossed the 1 lakh crore mark for the second straight month as consumption rose during the festive season. Collections for November stood at 1.03 lakh crore, which is the same as that collected in October. The number was 5.1% above the monthly average of 98,114 crore rupees for FY19. The government collected 19,962 crore under CGST, about 26,800 crore under SGST, and 48,100 crore under IGST. And it also collected over 8,300 crore rupees as compensation cess. Now, a factor that needs to be kept in mind is that the government in November had curtailed the ITC claimable without matching invoices to 20%. That may have been a factor in boosting revenues, according to experts. Earlier this month, the government had set a monthly GST collection target of 1.1 lakh crore rupees, and PTI reported that the government is likely to miss its tax collection target for the year. All right, let's talk about some of the other stories you'll find on the website BloombergQuint.com if you were to take a look as of now. First up, India will attempt a second moon landing after a previous try, that is last year. I'm sure all of you know about this. Chandrayaan-2 failed just minutes before a scheduled touchdown on the lunar surface. Chandrayaan-3, the mission that is going to be likely to be launched this year, will consist a lander and a rover, and will use inputs from an orbiter from the previous mission, according to K. Sivan, the chairman of the Indian Space Research Organization. He was speaking in Bengaluru yesterday. Apollo Global Management and Vade Partners are no longer considering bidding for Altico Capital, according to people familiar with the matter who spoke to Bloomberg. The firms pulled out because they were unwilling to meet creditor demands to inject as much as 2,000 crore rupees of fresh equity into Altico. All right, that's all you need to know going into trade today, but do stay tuned. There's clearly lots to talk about. This is Bloomberg Quint.